What's up, traders? Welcome back to the channel. Here we're going to be going over a very quick and brief breakdown of a GBP USD buy trade prior to CPI, right? So it's important to understand the sells were on the cards prior to CPI. So CPI was this large candle over here. So this candle here was responsible for CPI. And up until that point, what we were looking for essentially was for price to mitigate or come into this premium zone over here. So we were looking for buys into the premium, okay? So what we were looking for essentially is for price to come into this region, which it did through CPI. So we're now going to dissect how you could have got involved in a trade prior to CPI this week, okay? So now if we head down to the M15 time frame or the 15-minute time frame, we can begin to dissect how we could have got involved in this market, right? So this is the trade that was taken here. This setup actually occurred on the 8th of February. So let's break down the trade and let's analyze how we could have got involved. But first, we're going to look at our basic principles, our basic structural principles, right? So here we have our swing. So our swing high is all the way up here. And we had our swing H4 low, which is all the way down here. Now, price came in to a H4 POI over here, right? So this reaction we see, right, giving us an M15 change of character, right? So this is our M15 chalk or M15 change of character. Chalk is something that's used a lot within the industry. It's something we use not too heavily, but we do use it to understand simple shifts in internal structure, not swing structure, internal structure, right? So this is our change of character. I made that a bit bigger. This is our change of character as prices hit the H4 POI. So now we need to ask ourselves, how could we have got involved in a long trade targeting the H4 premium? Right. So if we go to the 8th of February, which is where the setup was essentially taken, right? If we now go down to the 5-minute time frame, our execution time frame, we can begin to dissect how you could have got involved in this trade. Starting from the London session, right? The London session, okay? So if I just get rid of, make the charts a bit cleaner, there we go. So of course here we start with the Asian session like we always do. IPTA has 4 very specific things it does, right? IPTA can either consolidate, expand, retrace, or reverse, right? That's all it can do, right? So IPTA starts with a consolidation. As ICT says, everything starts with a consolidation, right? So this is the Asian range. And we use the Asian range heavily in our analysis here at Liquid FX, right? So this is the Asian range, right? So the Asian range, for those who are unsure, the Asian range builds liquidity and it's from 8 p.m. to midnight Eastern Standard Time or New York time, right? So the Asian range indicates a sweep of the Asian range builds liquidity, and we're looking for sweeps of the Asian high and low to aid our trades, right? So that's the first thing. So we understand here we have an Asian range. So as we go down, we're just going to be marking out our structure, right? So if we look at our most recent structure, we had a swing high made in London and we had a swing low. We had a swing high over here and price has since then, sorry, come down and given us internal M5 breaks of structure, right? Giving us lows and highs, lows and highs, and lows. And then we had our break of structure delineated with this arrow over here. So this arrow represents a shift in market structure, right? People ask me, well, what time frame is this on? This is the M5. So you can use the M15 or the M5 for entries, right? M15 or M5. So we had 2 breaks of structure to the upside, right? We had 2 breaks of structure. So now we have something we need to understand is that we had bearish structure coming down. Then we had a shift in market structure, right? And we had another shift in market structure. So what we have over here is we have our first break of structure, so our initial shift of structure. So you can call this boss one or initial shift of structure. Some people call it a chalk. It's all really the same thing. We're looking for shift in market structure. Now the second boss represents our confirmed bullish break, right? So that represents our confirmed bullish break. So remember, we're looking for buys, right? So when we see 2 breaks of structure in succession, the way we have over here, we had our second break of structure over here. This here represents a shift in market structure below the Asian range. And that's exactly what we're looking for because we want to buy below the New York midnight opening price because that's when IPTA, the interbank price delivery algorithm, resets. So we're looking for this phenomena to occur below the Asian range. That's important to understand, right? So now, moving on, we have our break of structure. What's the next rule for an order block, right? We're looking now for an order block, but the order block itself has to have 3 rules to it, right? 3 rules. Now, what are they? The first we established as a break of structure. The second rule we're looking for is that we need to see a clear fair value gap, right? We need to see a clear fair value gap in either London or the New York session. right? Time specific, right? ICT is all about time and then price. Time is critical. And the third thing we're looking for is we want our fair value gap, or therefore our order block, to be in the discounted region, right? Because we're looking to buy. If we were looking to sell, we would want our order block to be in the premium, right? But because we're buying, we want it to be in the discount. So with those three rules in mind, right, let's analyze how we could have got involved in a trade. Let's see how this trade was taken, right? So this was a trade that the setup itself presented on a Thursday. We had our Judah swing given, our Judah swing in the New York session, right? So this is our Judah swing marked out in yellow. Our Judah swing represents the manipulation, right? So the Judah swing is a manipulation. And the Judah swing will be the low of the day in a bullish market and will be the high of the day in a bearish market, right? Always below that Asian range, right? We start with the Asian range as the consolidation. Now from here we need to understand we now need to look at where are the fair value gaps. Okay, so we have an M5 fair value gap sitting just over here. So if I zoom into that, we can begin to see that we have a very clear fair value gap in this region in front of you on your screen. And this here is what we're going to be looking to use as our order block, right? So this is an order block. And what makes this an order block is the fact that it does break structure, it's priced in the discount, and it leaves a fair value gap in the New York session. So this is our order block of entry, right? This is our order block. Now, if we just drag to the left, sorry, drag to the right, price mitigated or just missed our order block, right? So this is something we want to establish. I typically enter at the top of the fair value gap, so I'm not missed on a trade, right? So my entry was here, just above the order block, to allow for price to come in as much as it wants to into the fair value gap, have a safe stop loss below the Judah swing. You could argue it could be a little bit shorter, but this is a safe stop loss below the Judah swing. And this was a trade that rallied up to 2.5R, right? I held it into the following week, so I held it into this week, Monday the 12th, just before CPI, right? 90%, or sorry, 85% of partials were taken at 2.5R, right? The reason for that is because, as you can see, we had CPI. Now, CPI is a very, very volatile news event, so obviously you want to be risk-free and essentially out of your trades before an event like CPI. So this here was CPI. And what do you want to do? You want to get out, be risk-free. These are things that you must do before news events, right? Not during news events, right? Because that's how accounts get slipped and blown, right? You want to get out before news events like CPI, before news events like NFP, before FOMC, before PPI, right? These red folder newses is like a smokescreen, right? And we need to make sure that we're well positioned in terms of our risk and direction before these news events occur, right? Take partials or just wait for the news event to unfold, then get involved in the market, right? So that's a little quick ICT tip, or just a general trade tip, right? When it comes to trading news. And this was a great swing that was held from last week into the following week, Tuesday, and it all started with our Asian range consolidation, right? So to sum that up, we had an Asian range accumulation. So this is what the A stands for in the AMD. The A stands for AMD. Sorry, the A stands for accumulation, right? The manipulation, as we discussed, is the Judah swing up down here, right? So this is the manipulation. What the M stands for, if I can spell manipulation. And we had the distribution, which is what we're looking to buy, right? This is the third stage of the AMD, or the power of three. We're looking to buy 2.5-hour trade, right? So excellent intraday slash swing trade, depending on how you look at it. And this is how you could trade the Forex pairs, right? And this is how we trade at Liquid FX ICT 101, right? So if you like this video, give it a like, give it a thumbs up, and I look forward to seeing you all in the next one.